I wasn't where I was supposed to be, apparently. So, oh man, crazy day, crazy day. Minimize that. So yeah, so like I was saying to you, I'm looking at this as just not. It's a range and a range, right? If I wanted to make the case, I'd say that the initial balance is obviously the primary range. The sub context or the range within that is basically what you're looking at for the lunch hour. So from 12, you could look at it from 12 to 1, or you could look at it from 12 to 1:30, either or. It's 121 right now. So you're literally looking at, again, and if we're talking about like areas of interest, this may be one of the reasons why this candle range here that's high is at 1035 hasn't been run out yet. I'm not saying that's why it's not. I'm just kind of putting a couple of things in motion just to say, okay, when do we take that, right? And if we take it, do we close back inside and run the low, right? So let's see what happens if we just continue to kind of stack up relative equal highs up here, because we can, realistically. And then if we take the buy side from the initial balance, are we going to create a situation where, and in my opinion, I think we could, do we create a situation in a case by which we're going right back into that original I need structure to show me, right? Do we go into I need structure to show me that you want to come back, right? And I said earlier in the live this morning, I'm not looking for lower price personally. I don't want to see it. Like that's just me. I don't want to see it, because I think we're bullish overall, but that's not to say I don't know what NFP holds tomorrow, right? I have no idea. The fact that we've come back into this area, again, is it a springboard to clear some of this out and maybe close back inside this initial balance for tomorrow? It's possible. Completely possible. Because in essence, what are we looking at? I'm going to use one of my crude rectangles here, but in actuality, like this gigantic blue horizontal box, this is Thursday's daily range. This is a whole daily range. So do you make the argument that, that obviously can't be run prior to what? Can't be run prior to Globex or the 6 p.m. open. So again, just a thought. It's literally, I'm just like putting this out on the table. What if? I mean, at the end of the day, that's what we do, right? We speculate. So that's just my speculation. We've right now, if you look at it from a weekly profile perspective, we put every day has put in a consecutive high. Monday established a low. Tuesday ran Monday high. Wednesday ran Tuesday high. Today we ran Wednesday's high. So what might be probabilistic to complete this weekly profile? A Globex open that takes Thursday's high, and Friday that not only has economic news with NFP, but it also has the ability to do what? Close back inside Thursday. and establish its own range. So even if we take the buy side before, say, regular trade hour or the close of the market today, what do we kind of, if we stay up here, we stay in this premium for the daily, like if today's a PD array by itself, if we just look at the day, if we remain up here and we close up here, well, where are we closing? We're closing in a premium from a daily range. So what might we anticipate? I don't know about you, but I'd be looking at what structures being put in during regular trade hours, and even in electronic trade hours. If we run out the high, just an idea. I could be well off my rocker, but while I was ranting, we took out this liquidity up here at 1035. So from the live call out of the candle range, that actually played out. It took forever. It took a while, but it did play out. So that would have been that would have worked out. But that was some dentistry right there. That was definitely like worth pulling teeth, because we didn't really start to get the move up until 12:30. Now I know I'd established basically a mean threshold for if price closed above, we could continue to run long. I did that before then, but yeah. So now, again, like, what are we looking at now? Super that high. That's a 120. Yeah, I don't know. But yeah, congratulations on taking out that 1035 high. Congratulations. One more time. All right, don't be shy. Don't be shy. Okay. Nah. Okay, so about 2 minutes, and we kind of want to sit through the 130. I want to see what happens here. Because if we want to treat this, and we can, if we want to treat this as a 12 to 1 lunch hour, okay, which we can do. This is 105. This candle here is 105. So 1255 set the high. So we taking this out. So high, you ready? High, low, that's a higher high right here. So what might I be looking for in the closure of this essentially the 125 candle? I might want to, it doesn't matter as long as it doesn't close above this, okay? As long as it doesn't close above what is now our higher high. All it needs to do is close in here. What am I looking for my 130 candle to do? Expand short. This candle, just don't close above here. 130, expand short. 135, expand short and give me fair value in here. You can do whatever kind of foolishness you want to do. You could continue to create liquidity and at some point retest and come on down. That's a very crude depiction in terms of my path tool, so don't judge my path tool drawings. But so now here's the 130. So what do we get for 130? Let's see. Because I might be off my rocker. And this could, blast off. But let's see. Because if what I'm looking at, if my analysis is structurally correct, I'm not saying it is, if it's correct, that should close inside. It should expand lower. Maybe it takes it out. Okay, well, structure narrative is wrong. Okay, can live with that. Can absolutely live with that. So, is it possible that wasn't deemed, or this wasn't deemed a high? I mean, it looks like it's a high. This looks like it's a low. This is a higher high. But who knows? Maybe not. Or maybe we get like another companion situation. Maybe this is the high, and maybe this could be the high, and this could be the higher high and the low, which is also possible. But let's see. Because in that scenario, we literally don't have to clear the buy side, and we can still stay in this range. And price can still mitigate without taking out either buy side or sell side from initial balance for today, which would still allow liquidity creation, yada, 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 going into NFP for tomorrow. Meaning you're not tipping your hand. Nobody has an idea. Nobody knows. You can't anticipate an overnight run to any area, any one area or a specific point of interest, because there's not going to be enough information that's been provided. There's not going to be enough, maybe, and I would still consider myself a novice, but maybe an experienced speculator or an experienced technician could maybe spot a couple of footprints in terms of what the expectation or what the anticipated delivery to set up NFP would be. But, who knows? So, maybe this is the higher high. Like I said, we'll see. So maybe we presume that this is just the clear of the lunch hour high, which is possible. I mean, have that kind of happens. I need to change that so it can be seen. There you go. I think that can be seen. Yeah. Yeah. Okay. So this could be seen as just a mere clear mitigation, right? This would ultimately be a high. And as I said earlier, this could be a high. And if we get even a closure back inside here, yeah, I know who you are. Go away. If we get a fair enough wick low on this candle, the next candle could open, and it could be determined. So like this one, I don't know. Let's just see how this pans out. stop guessing candles here. What'll be interesting, it'll essentially be the third time it'll be the third time within the last 4 sessions that the same structural order flow is set up. So the Globex session last night, we set up the same way with a clearer buy side, a closure, a definitive low back inside. So it was a high, low, higher high that did not complete and didn't deliver. It didn't even deliver this morning. However, the AM session this morning set up the same thing. A low high and not quite a lower low, but a relative equal low. And now we're setting up the same thing. But this is, interestingly enough, this is technically the PM session, but it's abridged by the lunch hour. That's like the preface to how this is being, this foundation is being laid out. So this would inevitably, well, I don't want to say inevitably, but this could, in a fair amount of probability and likelihood, set up this way to allow, if properly manipulated in terms of the liquidity and accumulation, could very well set up, again, bullish price action. Not bearish, but bullish price action. So that's a nice decent size, and you're getting your, again, here's your displacement in this candle. Beautiful. Beautiful, beautiful. Nice. Okay. Now, here's where it's going to get interesting, because we got a candle closure in about a minute and a half. Here's where it gets interesting. Me, Jeremy, I would like this candle to close below this mean threshold. Okay? Why? Why do I want that? Because I'd like to see the next candle that opens tap back into this mean threshold and give us our first area of fair value and continue lower. And you might ask yourself, well, what? Like, Jeremy, I don't understand. Like, why would you want to see that? Couple reasons. Couple. Well, do I really want to see that? Yeah, actually I do. Actually I do. And you can say, well, why would you want to see that? Because we will have established our high, okay? And you could say, well, it's out of order if we have a high and then we have a higher high and then we have a low. I didn't get my wish. Did not get my wish. But I might get it awkwardly. I need to set up like different types of sound alerts. So right now the sound alert I should have set up is Patrick Stewart from the original Dune, where they're getting the miners off of the skiff because there's a worm coming, and he's like, sloppy, really damn sloppy. So that's what I would describe this closure below, because it would have been beautiful if that closed under, this one opened below, tapped back in and ran. But right now that's just kind of sloppy. But hey, price, whatever floats your boat. However you get there, it's as long as you get there. However you get there, go get. That means go on and get it. Translation. But this will do we get 2 out of this? We might end up with 2 out of it. Yeah, we might end up with 2 out of it. If this closes under, we don't have to close through this wick or even a body. It doesn't matter. Like, as long as we leave one area open, this was fair value. You've got a low in it. So this can actually be run through. But let's see. Let's just see how this plays out. That's closing back above. And close to here. So if it's truly out of kilter in terms of the delivery, this may run all the way back up, and this might basically become a new high. But it can also create the low and then correct the structure. You understand what I mean? Like, basically, I already said, like, this is a high and then this is a higher high, but usually you have a high, a low, and then a higher high. So this structural narrative is not correct, right? Because there's no established low in between these two. But if you look at them, they have an accompanying or an adjoining candle that allows them to both be highs. So here's a high and then there's a higher high, but we don't have a low. So this could either change the total dynamic of how price is being delivered, or this can literally push up and become that high, and the next candle printing could close relatively anywhere in here, and this wick be the low. So this is potentially describing what I said this candle could be. So it could be this one. You just get a massive wick on both ends that allows that particular candle to operate and act as the higher high and the low at the same time. So let's see. Got about 30 seconds before this candle closes. And then if it doesn't, we're probably going to be looking for a higher high. If, again, a lot of conjecture, but just looking at the delivery, if that is what is intended for it to be, structurally correct, we would look for another high. Or it's just going to, do whatever it's going to do. Or we could go back to the original premise, which was this is an established low and this is a high. I mean, this could have just been for liquidity's sake, you know. If we see this push down that clears this out, and theoretically this is a low that can be run, right? And again, if you ask what would make me say that, because this is a low that's sitting at the consummate encroachment within an area of fair value. So lows and highs that sit in these areas are always going to be subject to be run. That is, I mean, you could say that about any high or low, but there are higher probability of highs and lows when they're sitting in fair value for them to be run out. So this may be primed to be run through if indeed this original structural narrative that I was looking at might have been correct. So just a way to try to be flexible when you're looking at price. And honestly, just to be a little bit overly, it sounds crazy, but to be overly critical, because it'll allow you to stay, I guess you could say, nimble to some degree. Whereas if you're fixated on a particular structure, or you're fixated on specific candles waiting for a particular structure to develop, you'll miss like the underlying move that might be accompanied with the adjacent candles that you're not looking at, or maybe you just forgot about them. And I can say that with great confidence because, yeah, it happens to me sometimes. It happens to me a lot, you know, to let you know. It does, because sometimes you get fixated on, and it's not I know I'm right, it's this one, but it's more or less like I'm waiting for this delivery in relationship to this candle. It's not I'm waiting for this delivery in terms of this candle, these candles structure. So you can very easily get tunnel vision, and you know, it's not always related or relatable to fatigue. Sometimes it becomes, you get so fixated in a particular bias that even though you're looking at something that could be so obvious, you don't see it, because your prime focus is that you want to see your bias that you formulated, your narrative that you formulated carried out in whatever the disposition of the candle printing is going to be. And if it's not that candle, it's the next candle. And you've ignored like 3 candles that have pretty much told you that's not going to happen. And you're a racehorse. You got binders on. So it happens. It happens to the best of us. So okay, so rock. Coming back inside. Let's see. Got about 20 seconds before this candle closes. If this closes inside, if we get it to short, maybe? No? 10 seconds. Does it close back in? So if it closes back in, we could be looking at this to get run. Maybe. Let's see. Long or short? Nope. Closed above, but let's see. And if you don't see what I'm looking at, I'm looking at this. to this. That's why I was saying if this candle closed back inside, we were probably going to run here. So that's what I was looking at. When I put my cursor up here, I put my mouse and I just left it. I was trying to see if this candle was actually going to close inside, because I'm looking at, the body respected inside. We closed inside. This could have been just a very mini manipulation, and now we may be looking to take this out, which will then fit that narrative again, potentially of a high, a low, and then a higher high. But we're going to need sell side liquidity collected and gathered for longs, and this could be a deeper mitigation to collect or to continue to another inefficiency or fair value. Because once we get through here, like you got lows, but there's like no inefficiency. So yeah, if we actually come back down here like that, excuse me, that wouldn't be too far-fetched. But as I said, for me, looking at it, this might tip. If I were a person that would be trading tomorrow, if we get back down here before we close, or if we get back down here like right after the close, and like the 435s up to 455, you see, price down here. I don't know. Globex and the overnight, the electronic hours, all I would do is I would look and see where 410 closed. I would look at where 410 was in relationship to, how would I do that? I would look at 410 and I would follow basically the Globex and the overnight, the electronic trade hours, and I would look to see what London's manipulation was. I would look to see if price basically manipulated higher, like it was for Friday, right? If between midnight and 5 a.m. Eastern Standard Time, I would look and see if London was manipulating to make a high, or, that overnight high, or if it was making an overnight low in relationship to the 410 close. Because if it's making a low in relationship to 410, the likelihood is it's made that low and it's below the midnight open, which essentially means that when price opens, even New York pre, like the 830, because NFP is at 830, there's a possibility that price will go down first, which would be the manipulation in the 830 candle, but it ultimately may spool higher because you're below the midnight open and you're below the previous day's PM session, which would also support by the time you get to the open 930, depending upon what that pre-New York open run-up was for NFP. If the 830 has exceeded that 410 level, you may see your 930 opening candle retrace back down, because it's still technically pre-market. Even though it's pre-New York, like you'll have a structure that's going to show you whether or not. But that's why I said I'm not going to, but that's kind of what I might do, is look and see whether or not like the overnight, the London creates a manipulated high or low based on 410. And this is 155, and we're just easing on down, ease on down the road. It'd be great to get some expansion in this candle. Be absolutely wonderful. Maybe a little bit of fair value, something. So in a 1 minute, that was inverted. It's volume imbalance. That is disgusting. Oh man, that is just disgusting. But yeah. This is like this 1 minute is the epitome of I know the show is called Whose Line Is It Anyway? This show would be called Whose Liquidity Is It Anyway? Whose liquidity is it? Sweet 8-pound baby Jesus. Oh man. Is it buyers or sellers? Who does it belong to? Pick a side, pick a side, pick a side, anybody. Anybody, pick a side. But again, based on structural narrative, still be you would be leaning towards here, right? So even if you look at this again, even on a 1 minute, you could say, well, I hear what you're saying, but we closed in here before. Yeah, on a 5 minute, but you could follow it again, utilizing the same disposition as we did before, right? So you could say, yeah, that's a high. Yes, this is a low. Yeah, that's the higher high, but you didn't get the delivery back here. So you can kind of go through the same thing all over again. You say, okay, high, low, this is a higher high. We didn't get a displacement. So you kind of come right back. There's your high, there's your low, there's your higher high. So you have this displacement. You don't have any fair value until you get here, right? But then this is disrespected. So I'm going to share this with you guys because this is what used to jack me up a lot. Like once I got to the point where I went from not being able to see price, couldn't read price action, couldn't do, I was fucking horrible at it. And I would look at this and I go, oh, 2022 model or whatever, right? And I'd say, oh, there's my fair value, so I can put my stop right here. Will you see what happens? You get stopped out. Because what I didn't understand was, ideally, yes, if you're looking at fair value holding the retracement into, that would be correct. Instead of looking at this as the protected high to allow price to distribute, I would literally just like jam my stop right here, take it out, stopped out, and then price would run. And I'd be pissed off thinking this shit doesn't, like what most people say, this shit doesn't work. It does. You just have to understand, what the expectation and what is the delivery, right? So I say that to say, whenever you get into like the stutter, or some people I wouldn't call this a head fake. I call this like the stutter. High, low, higher, high. You don't get the displacement, but you get another low. It's real shallow. And then you get another high. It's like, okay, technically you're saying forget about this structure, but don't forget about this low, because that's still the target, right? What you're forgetting about is this is, yeah, it's a high, but now let's just look at it. It becomes, this is just a mitigation. This is just a mitigation of that previous range. We've established a low. That's the target. This was the expansion for the target. Now we're coming back up. That's a high, clearly. This is a low, clearly. This is a higher high, clearly. This is a displacement leg. So you could do the same thing twice, and you could say, okay, we get the retracement. That's my protected high. You negotiate whatever you want. You could put your stop up here if you, however you negotiate your stops, and then you let price play out to this level. But ultimately, you would still also be looking for this. So at some point, you would like to think and anticipate the delivery is still going to be to this low. Why? Because it was still a part of the original mitigation. Remember when I just said, don't treat this as a high, you just treat it as a mitigation of the previous range. So if that's what that is, this literally is a low as a result of this mitigation. So it's almost like it's creating its own range to be run. And with that premise, you're saying, this is a range, this is the range high, this is the range low. Well, my mitigation range high cleared with a high. There's a low, there's a higher high. And we've cleared all the way back across. So is it 100%? No, it's not. It's like everything else. You would think the probability will be on your side. And when you incorporate something like candle range, this can always also save you in terms of knowing when you can cut, a potential loss, or you mitigate your losses. Because like this candle, like basically what's happening here on a 1 minute, if this comes all the way back up, you could say, hey, look, my invalidation point is here. So if you're in with 2 micro contracts and you get 1 micro that clears this low, you might move a stop here to break even for the candle range to see if you can continue to get the delivery here. And then if not, you've got, your partial for your 1 micro maybe. Or if you're balling and you got a 150K and you're trading 2 contracts, you got your 1 contract deliver, you've got another contract that's still on, but it's a risk off because you're at break even. So you're not really going to lose anything. You only stand to gain. You could do that if you just want to let it run, or you could just cut it and take whatever that profit is. It's all the same. Take whatever you can off the table and then just sit and watch and see if it delivers. So, it could be something that helps you in the future, kind of in a dual facet capacity. So on the one hand, it could help you in the future sit through drawdown, right? Or sit through the excitement and the antsiness of it's about to hit my TP, but it just won't get there. What the hell, right? It will help with that. And that kind of helps the emotional aspect of it, because it leaves you with a different kind of question to ask yourself. And that question is, do I want to continue to hold this until, my ultimate terminus or my determined take profit is hit? Or do I just want to take what's on the table off? Right? And you can take it off. And then again, it's the muscle and it's the patience to say, okay, now I'm out. I'm just going to sit here and watch and see if it runs. So I always feel like, that is an extremely helpful psychological hurdle that you can help yourself get over. And it helps. Now, it's like everything else. Are you going to feel like that 100% of the time? No, you won't. Especially when you feel like you've kind of maybe you've forced yourself into a position, or you've taken a market order and you didn't get the best fill, and it's like when you start getting those feelings, then yeah, maybe you just kind of want to say, yeah, no, I'll take the zero. I'll take it, and I'm gonna move on. So
I immediately regret this decision. Ron.
Yeah, you get moments like that. So yeah, we might just dance around in here. Yeah, it looks like the 1 minute is just going to do some, popping and locking, which, I'm not interested in the popping luck. Yeah, it's it may be reversing. Yeah, it may be reversing here. Yeah, it should be an accumulation piece for another short. Let's see. Yeah, this may be turning around. Yeah. Price action said, "Fuck your candle range theory, Jeremy. Fuck it." Say what? You said we going down there? We not going down there. Fuck your candle range, homie. Oh man. But I mean, it was a reversal to some degree. So so yeah, it's probably just gonna reverse back out. But again, that same structural narrative, until we run this, is still in place. We run it, it's not a valid idea any longer. And what it does is it then propels price to presume, I don't want to say assume, it presumes that price will continue to run bullish. Because in effect, what this will become if we're not taking out a low, like a structural play to show you that, longs may be in play because we've accumulated long positions from sell side liquidity. What this basically shows is that there was already a reaccumulation that took place that was sufficient enough to clear out a previous protected high to allow price to continue to run bullish. So it didn't need a structural hierarchy, if you will, or structural delivery for a higher price. It just needed to complete a reaccumulation or a reacquiring of liquidity within a range to break out and continue. So that's a wick through. And again, because there's probably somebody that's like calling bullshit on what I'm saying to you. But this is, by definition, this candle, buy side, sell side. What's above and below it? Liquidity. Where is it? It's in a range. What is this? If this maintains itself, you just took buy side liquidity or interterm liquidity. What are you doing with it? Okay, it's going to run long. So it's still in this range, but if ultimately what it's doing is clearing and manipulating to get back above this, it's still, again, satisfying a reaccumulation for higher price. Doesn't need to clear out all the sell side to do that. So we shall find out. Should have had some music playing, huh? The only thing y'all hear is it probably sound like I'm at the damn beach, but I've got my fan on in here. And I know you're like, well, you got a fan on, but you got a pullover on. Don't judge me. I like hoodies and pullovers. Oh, it's so judgmental. Gosh, stop it. Hurt my feelings. Let's see if we can find some, get some music. I might have to step away here for a minute. I'm not gonna put on the be right back. I'm gonna leave price up. And yeah, let me probably have to go back to
community and monetize with memberships and pay-per-view. With built-in AI.
All right. So yeah, I'm not gonna kill my my camera. I'm just going to leave the camera on and pinch this just a little bit and slide this over like so. And yeah, give me a couple minutes. I'll be right back. Sorry and thank you. I'm back. We're back. All right, 220. Yeah, I was gonna say the best thing we could hope for is to close back inside that 2 o'clock 5-minute candle. It's tight, son. It's tight. making too much noise. My dog heard me. I had to go feed him some vittles for the pup. He's actually not a damn puppy, but it's my buddy. See if we can get a delivery at least maybe by I don't know, 2:45, 3 o'clock. And then with that, I'm probably going to end this video on or about that time. I'm gonna definitely upload this because I think it'll be maybe helpful for somebody. And again, the idea is not necessarily about wins and losses, right? This is probably more or less just the area where you're trying to determine, just based on the probability, like what could you anticipate the probable delivery being? Not what you want, but what's the probable delivery. And if you notice, I left this over here, right? I've left this out here for a reason. And that's why, like, this is a 50-50, but I tried to, just keep this off to the side where I could look at this and eyeball, like, again, if you're looking for a percentage, like that mean threshold followed across, like you're going to get a percentage of maybe what side is being leaned to a little bit more. Eyes. But as I said, this is more or less just designed and meant to, like I said, help somebody out there that is struggling just to kind of find not so much the consistency in being profitable, but the consistency in just kind of following your trade plan. And then even ultimately, like on a day like this, where you could literally just come in and not feel pressured, right? There's no pressure to get in to see if what you're looking at, what you think is going to deliver is right. You can do that by doing what we're doing right now, what I've been doing, what we've been doing for the last hour and 4 minutes. Just sit and watch. It'll teach you quite a bit, honestly, and I think that is kind of like it's like the missing piece. You know what I mean? It's kind of like the internship that nobody wants because there's no money in the internship. This is kind of like that, right? But it is invaluable to just kind of be able to say, look, I'm going to take a day off from pushing a button, or maybe I push the button in the morning or whatever, and I'm going to intern this afternoon, and we're just going to watch, and we're going to, annotate, but not for the purpose of taking a position. You're just going to annotate for the purpose of looking to see what is probable based on what price is giving you. What's probable? So we were already in this candle range, right? So now we're in this candle range. So if this one needed some kind of support and help maybe to getting back down here, this is an hour. This is a 5-minute candle, but it's a 5-minute 2 p.m. candle. That would get us closer to these relative equal lows, would it not? So again, you can, and this is another thing that I don't think that I've really talked about in any of the lives or even in any of the previous videos, but something just as simple as this could be a confluence for you, right? Because now we've cleared this. Now what else happens here? Do we pop right back up and go in the other direction, or do we potentially continue down? Because again, you have to remember, yes, there's liquidity here, but is it just reaching for this, or could it be reaching for other inefficiency or other lows? Let's see. Now that's close. There's the other low. Now, that took a while, but it literally took one low to be run, relative equal lows to be run, and are we technically off to the races now? Maybe not really, but what do you now have? What do we now have? That structural narrative for what? When price does decide it wants to turn around and come back, you're going to have the results and the reasoning for potentially bullish price action. Because now we have a high, we've got a low, we've got a higher high, and now you've got this nice, expansive, bearish candle. So do we get fair value in here? Like, now you can kind of take a step back and you can let price show you, and you don't do anything. You just let it run. Let it show you where it's going. You let it show you. Again, think internship. It's not about one of the few times where you would have to tell yourself that these types of sessions are not money-making sessions. These types of sessions are just study price. Just watch it. Just watch it. Visualize yourself already being where you want to be. On a day like this, just visualize yourself as having, achieved whatever that level of freedom is. And this is a day where you say, hey, look, you know what, I don't need to do anything today, but let's just go sit and reevaluate, or let's go sit and just evaluate the price that's being delivered. Let's see if we can build the story. Let's see if we can build the narrative, and let's see if that narrative fits the trade plan without pushing a button. And just declare to yourself, this isn't, I'm not going to be a willing participant in positions today, but I'm going to be a willing participant in following and seeing if price lays out if you give me a footprint, right? So these relative equal lows, and now lo and behold, now we get a closure below, right? And now you potentially have fair value forming here. And what's happening? So again, range within the range. Is a sell side more susceptible than a buy side at this level? I would probably say at this particular level, maybe, because, and if you say, well, why? Because we've already run out sell side. we've run out relative equal lows, and I said this earlier, so there were probably some people that didn't really either understand or didn't believe what I was saying, thinking I was speaking out of the side of my head. I said previously, if you find highs or lows in areas of fair value, they are targets to be run. I wasn't making it up. And if I don't know, I tell you I don't know. Said that too on live stream. So, yes, it would make it more susceptible to maybe run this out. But I will say again, as I said before, I don't want to see this get run through. This cleared, yes, we can clear back in. I do not want to see this get completely run through. Okay, 232. All right, so it's tapped back into this area. Just tap back in. Let's see if it runs through and re-enters this mean threshold and this order block from about 7 this morning and clears out our initial balance sell side. There's your sell side into the mean threshold. Now, does it wick back up and through? I'd like to see it just literally just soup it. I don't want it to close below it. I said it earlier, Price is literally like giving it to me today. It's like, we don't care what you want, fool. We gone. Yeah, I would prefer a wick through. I don't want the body. We don't want the body. Nobody, senor. Favor. Please. Favor. Only the wick. Pass the wick. Pass the wick. No Tyrone, I'm bilingual. Only the wick. The wickety wick. On the way. Go. Go, 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 go. We can do the wick. Keep going. Go, 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 go. Go, go. Go, 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 go. Yeah, we got 30 seconds. So, yeah, we do not want, we don't. And if you're wondering why I keep saying don't want that, is because then we're in my analysis, if we close below that, then everything is kind of, we go back to like a neutral position in terms of price. So yeah, that's not really what I wanted to see, but maybe that's enough to allow a closure back up and above. So yeah, I don't think we're gonna get that, but let's see. Yeah, I'd like to just kind of see this come back up. I don't want it down here. And it might not make sense to anybody, But I feel like if we close back in here or we close below this, unless we're coming down to soup this level and we close back up. So it's 236, right? The more time we spend in this area, like I said, it goes back to a neutral position. You're not really going to be overly bullish. And the bearishness is only, again, going to be for reaccumulations to run long until we get back above, in my opinion, this area. But as you can see, that's the pop that I kind of wanted to see happen. And I would like to see a closure above this level. So there are some that would say, Jeremy, you call this an order block, so we closed through the order block. We really didn't. Wicks, and it depends on who you talk to. Some people will say this was an invalidation of the order block, and if we close back above, this will be a reclaiming of the order block, which means price will have to come up, retouch to reestablish this as being a bullish order block. Until we get a closure below, I'm still going to consider that a valid bullish order block. And that, again, goes back to what I just said a minute ago when I said closure below this, it kind of nullifies the longs for me, because it then turns into, this becomes an area for reclamation. We'd have to reclaim it, retest to confirm, and then move away. So it's easier for a wick through and a closure back above, or a closure in the upper 50%, to not have to invalidate it. So if I were pushing the button, I would still wait actually for this candle to close, because then this will give us 2 consecutive, but the area is gonna be massive. It'll be massive. Just based on how price is pushing back up here. And we've got like a minute and a half before this candle closes. Because I would be looking at this. At this time, it would be that. It would be, I mean, that's not super, but it's big enough. That's big enough. Hey, we just needed to close above. Because marking it out, like, essentially, if it closes below, there's really, it can still be marked out, but then I would be marking it out not for the purposes of watching price run long. I would be marking it out for the purposes of reclaiming the order block and still looking for it to maybe come back, retest before going. So a couple of points with that. All right, we've got about 5 seconds to close, so I'm just gonna mark that, and let's see. There we go. So that works. So we could see this retest here and move away. And if you were taking a position, or just had to take a position, if you were going to take like a market order or something, it would be that. And what could you target? What would you target? That high, maybe. There's your retest. Let's see. It may be going to take the PM from previous. Yeah, it's going to take that. So this may be invalid right now. Let's see. Because if it's below right now, we're not in a manipulation. We're in an expansion phase right now in this candle. So, yeah, we've got about 50 seconds to close. So again, same premise, nothing's changed. This candle closure above, we're still looking for higher price. It's just an extremely deeper mitigation or a deeper retracement after coming in. And like I said, could be wrong. It could continue to take out that previous PM session sell side. I wouldn't anticipate that in this session or even overnight, but you know what I anticipate isn't of the composite nature. I'm not one of them. Now that's a closure above, so this could be a retest and then a move away. And what I'm talking about is not this initial level. I'm talking about this level. Oop. I'm talking about this level. That 50% right there. You see that? I know it's a bit of an overlap, but hopefully you can see. I'm trying to zoom in so you can see it. All right, so we'll wait for this candle to close, and then I think I'm gonna skedaddle, exit stage left. But I appreciate doing these kinds of videos, and like I know I sound like a broken record, but I mean it when I say that if it helps one person out there that, you know, is kind of just feeling like, what the hell, what the fuck, what the whatever, right? If it only resonates with that one somebody that needs to go back and watch a few times, you know, I don't have all of the fancy funky graphics spinning in and out, and, you know, the annotations that pop up. Just, again, raw, unfiltered. This is, you know, what you could look for, and I'm kind of just throwing suggestions. I'm giving you ideas. We look at price together, you know, and it's managed and looked upon in real time. We're not doing market replay. I'm telling you what I think based upon what's being delivered. And it's not about me telling you, showing, hey, didn't I tell you? It is not that. It is me saying, listen, based on what I see, what I'm looking at, this is what I would anticipate. This is what I think is more probable. And it's just to help you maybe envision price maybe a little bit differently than the way that you've been looking at it. So it's not me telling you to look at it the way I'm looking at it. It's maybe me saying, hey, just look at it differently through a different lens, right? Look at whatever that mitigation is and look at the candles and say, okay, before I thought it was doing this. Let me give it a few minutes. Let's give it some time, and let me see what the delivery shows me, right? And even if you have to use something where you say, I don't have a reference, right? So I'll give you a perfect example. If I didn't have this drawn out, I didn't know when this candle came down to take out sell side that I wasn't going to have an adjoining candle on this side, right? Because this is a low, right? This is a low. This is the other side of that low, though. So typically, what would you be looking for on this side? I used what? I used fair value. I used the concept of fair value for that. And I'm going to go back and I'll show you that, and we'll get out of here. You remember? I drew this. I drew this box because this is a fair value gap. Now, it serves two purposes for me. The first purpose is to say, hey, if you notice where this is at, call it what you want. It just worked out this way. But if you look at this, just look at this area as if it were a candle. Look at it as if it were a candle. So you got a candle here, you got a low here, you got a candle here. What is this? It's a low, right? And I went to this wick high, the body low, this wick high. And I just did a little pirouette and turned it around. It lines up with where I would say, hey, price closing above this, I'd consider a long. It has to close above it. So what am I telling you? What am I saying? I might not have the structure on the left side to compare the right side delivery to, but maybe I can make myself a mirror, right? Something that would show me, are you going to close within the mean threshold above? Maybe you run back long. If you close below it and I'm looking for longs, I'm not taking anything because maybe the structure is invalid right now. Or maybe it's invalid altogether. But again, the confluence, this order block that was back here from this morning, the sell side here, the sell side level, to pull this across and say, okay, so what do I have? I have two mean thresholds now to work with. This one and this one. So little things, okay? Little things. But yeah, hopefully it helps. Hopefully it helps someone. As always, I wish you guys the best. Like the video if it helps you out. Subscribe to the channel. We're always doing stuff like this. I'm always doing stuff like this. It can get boring to some people, but when it's something that you enjoy, it's something that you love doing, it's something that you love and enjoy talking about, it never gets old because you can always learn something. You're always going to find, no matter how many times you see something, there's always some little nuance difference. It doesn't matter. Today we were talking about structural order for shorts, right? I said high. Usually you get a high, low, and a higher high. Well, what did we have today? We had a high, then we had a higher high, then you had a low. So out of order until you can see. So something always to learn. But yeah, like the video, leave me a comment below if you got any questions or anything like that. More than happy to answer them. Tomorrow, I'm a little on the fence. I don't know whether or not we're going to do the live tomorrow morning after NFP, or if we're going to wait until tomorrow evening, do a recap of the week. And I'm kind of leaning towards the recap for the end of the week. Unless I see something when I come in, or unless I look at the chart tonight and identify an idea that I'm not taking for tomorrow. And then we'll jump on and yeah, maybe another one of these, but we'll see. All right, so I'll see you guys later. Thanks.